channel. Today we will be revealing the best trading strategies and the best indicators in order to be profitable in the market. We will also evaluate classic indicators such as the MACD, the RSI, and the moving averages. Please subscribe to our channel if you want us to keep releasing technical analysis and price predictions for free. Also like our videos and leave a comment. Let's start our analysis with a case study, which is the Japanese index, the Nikkei 225, but we could have chosen to use any other kind of assets like cryptocurrencies, forex, and stocks. In the upper section of the chart, we see the naked price enveloped inside two triangular moving average bands, while beneath we have decided to use the MACD, which is a classic indicators. Now, as you can immediately understand, in terms of difference between the envelopes and the MACD, is that the difference comes from the numbers of fake breakouts that we can retrieve for the MACD, which cannot be detected for the envelopes. As you can see here, for example, we have a series of fake breakout here for the upper side, then for the downside, and also here once the chart becomes horizontal, once the price moves horizontally, as you can see here, the MACD has given to us two different signals, while for the envelopes we don't see any signal. So how we should be using the envelopes? As you can see here, we have many signals. The first one is here. Once the price touches the lower bands, we should be expecting a retrace and a movement and a counter trend movement. So 1, 2 here, third movement here, so the price hit the upper band, then we should be expecting a retrace, a counter trend movement till this area, which happened. Also here, we are almost close to the upper band, and then we have experienced the movement on the other side as well here. Actually, using and setting the triangular moving average bands based on the historical volatility, we have a huge advantage because we are able to understand when we should be expecting a retrace, a reversal. Actually, right now the Nikkei is almost hitting the upper triangular moving average bands around 24,000 points. From here, we should be expecting a retrace, which means a counter trend movement. Again, in terms of technical analysis, the bands are absolutely better than the MACD. The MACD, in terms of historical data, if applied to any kind of asset, is not reliable enough in order to give us the chance to be profitable in the market. Now, let's analyze the RSI, which means the Relative Strength Index. In my book, Forex the Holy Grail, I've been stating that the RSI should be used in a different way from the classic usage. In other words, if the asset tends to move in a trend, we should be using the RSI once the RSI crosses above the overbought area, if we are in an uptrend, or if we are in a downtrend, we should be selling short the asset once the RSI moves in the oversold area. While if the chart tends to move in such a way, so horizontally between an upper band and a lower band, then the RSI should be used in a different way. So once the RSI approaches the upper band, which means crosses above the 70 or 80 threshold, we should be expecting a reversal. Opposite scenario, if the RSI moves and crosses below the oversold area, from there we should be expecting a movement up. Now we can easily understand showing how to use the RSI. Okay, this is the Relative Strength Index, and as you can see here, once since in this case the Nikkei is moving horizontally, once the price crosses above the overbought area, we should be expecting a retrace. So in this case we should be selling short, and actually we would have been right. So as well in this case, as you can see here, the RSI crosses below the oversold area, and again here the price is moving in a horizontal way, and then we should be expecting a counter trend movement. As you can see here now, if we use a completely different asset, for example, if we analyze Amazon, which tends to move in a trend rather than in a range, the usage of the RSI will be completely different. So it's extremely important to understand how to use the bands and the RSI. As you can see here, once the RSI crosses above the overbought area, we should be long. we should be buying the Amazon, while the classic theory has taught to us that we should be selling, which is absolutely incorrect, as I've been stating in my book, Forex the Holy Grail. Once the price crosses above the overbought area and the asset tends to move in a trend, like in such a case, we should be buying rather than selling. Okay, so we should have been buying at 1,100 US dollar and then selling around this area, so 1,500 US dollar when the RSI crosses below the overbought area. Now, what about the moving averages? Moving averages work only in case of trending assets. But as you can see here, if we analyze Amazon, we don't need actually moving average to understand that this asset tends to be moving in a very strong uptrend. Okay, so moving averages are a technical indicator coming back from the 70s, and as Jim Simon, okay, the father of the quantistic theory, has been talking to us, right now moving averages don't work anymore. So I will not suggest moving average as a good technical indicator in order to be profitable in the market. Okay, so what it can be used in order to be profitable in the market are the triangular moving average bands, or any kind of bands that we can set up, and we should be adapting the bands based on the historical volatility. So now if we come back to the analyzing the Nikkei, as you can see here, we should go to index Nikkei 225. The moving average has been set up based on the historical volatility. So here we have retrieved one correct signal, second one, third one, almost. Here the price didn't touch the band, but it was correct. This one was correct as well, and this one was correct. Even in this case was correct. And now we should be expecting a retrace from 25,000 US dollar. So from 25,000 points, sorry. So the bands, the triangular moving average bands, are a great tool in order to understand when we should be expecting a trend reversal. While the MACD right now doesn't work anymore, the moving average don't work anymore, the RSI works only if we are able to separate the two different scenarios, if we are able to distinguish two different scenarios. So if the asset is moving in a trend, we should be buying the asset once the RSI moves above the overbought area. Okay, if we are talking about an uptrend. If we are in a downtrend, we should sell in short once the RSI crosses below the oversold area. Okay, now different scenario. If the asset moves in a range, then we should be buying once the RSI, okay, moves in the oversold area, and we should be selling once the RSI moves in the overbought area. Thank you, guys.